I am AI avatar of CA Ratan Mundra. The International Financial Services Centres Authority, commonly known as IFSCA, has introduced the proposed Managing General Agents Regulations 2026 for GIFT IFSC. These regulations aim to create a structured framework for managing general agents, also known as NGAs, in the insurance and reinsurance ecosystem. The proposal is considered one of the most important regulatory developments for the IFSC insurance market because it introduces a delegated authority model that is widely used in global markets like Lloyd's, Dubai International Financial Centre, and Singapore. The framework is expected to open new opportunities for insurers, reinsurers, brokers, consultants, and global underwriting platforms looking to operate from GIFT City. A managing general agent is an intermediary that receives authority from an insurer or reinsurer to perform specific insurance activities on its behalf. This authority is granted through a binding authority agreement, often called a BAA. An MGA may handle underwriting, policy issuance, business solicitation, premium administration, and in some cases claim settlement. Instead of the insurer directly handling every operational activity, the MGA becomes a specialized underwriting and distribution arm. Globally, MGAs are popular because they provide speed, technical expertise, niche underwriting capabilities, and access to new markets. The IFSCA framework aims to bring this international model into the IFSC ecosystem. One of the biggest developments in the proposed framework is the movement from a direct insurance-focused model toward a broader reinsurance-enabled structure. During the consultation process, several stakeholders highlighted that international MGA markets are heavily dependent on reinsurance and retrocession business. Restricting MGAs only to direct insurance would have reduced commercial viability. The modified framework now includes references to reinsurance, retrocession, International Financial Services Center insurance offices, also called IIOs, and reinsurance premiums. This change can significantly strengthen GIFT IFSC's position as an international reinsurance hub. The inclusion of IIOs is a major structural change in the regulations. An IIO operating in IFSC may appoint an MGA to perform underwriting and claims-related functions under a delegated authority arrangement. This creates a new operating model where IIOs can expand business without building large operational teams for every activity. Instead, specialized MGAs can manage portfolios, distribution, underwriting, and administration. At the same time, the framework also places strong oversight responsibilities on IIOs, including audits, compliance reviews, and monitoring of delegated authority arrangements. The binding authority agreement is the most important document in the MGA structure. It defines the exact authority granted by the insurer, reinsurer, or IIO to the MGA. The agreement normally specifies underwriting authority, claim settlement limits, reporting obligations, premium handling processes, audit rights, and compliance responsibilities. Stakeholders suggested that the IFSC framework should allow globally accepted and flexible BAA structures, similar to international delegated authority markets. This flexibility can help attract global insurance and reinsurance players into GIFT City. Another important change is the expansion of eligibility for promoters and applicants. The revised framework indicates that entities promoted by persons resident in India or outside India may participate in the IFSC NGA ecosystem. This creates opportunities for Indian insurance professionals, consultants, actuaries, underwriting experts, and insurtech businesses to establish MGA platforms in GIFT IFSC. Foreign insurers and reinsurers may also use the MGA structure to access Indian and international markets through a regulated IFSC platform. Claims authority is one of the most practical and commercially important aspects of the MGA framework. The draft regulations included a claims referral threshold, but stakeholders suggested that the limit should be more flexible and linked to the class of business. If claims authority is too restricted, the operational advantage of the MGA model reduces significantly because every claim would require approval from the insurer or reinsurer. A balanced approach can improve settlement efficiency while still maintaining regulatory supervision and governance controls. The proposed regulations make it clear that MGAs will operate under a strong compliance and governance framework. Applicants will need proper reporting systems, audit processes, cybersecurity controls, and professional indemnity arrangements. The framework also emphasizes premium reconciliation, claims tracking, segregated accounts, and operational transparency. Cybersecurity has become a particularly important area because MGAs may handle sensitive underwriting data, claims records, customer information, and financial transactions. The MGA framework has the potential to transform the IFSC insurance ecosystem. By allowing delegated authority structures, GIFT City can attract global reinsurers, specialty underwriters, and international insurance programs. The framework may also create new revenue opportunities for brokers, consultants, underwriting specialists, and compliance service providers. If implemented with sufficient flexibility, the regulations can position GIFT IFSC as a globally competitive insurance and reinsurance marketplace. The proposed IFSCA AMGA Regulations 2026 represent a major step toward building an international delegated authority insurance and reinsurance ecosystem in GIFT IFSC. The most significant development is the inclusion of reinsurance, IIO participation, delegated underwriting authority, and operational flexibility within a regulated framework. The final success of the regulations will depend on balancing commercial practicality with strong governance, transparency, and regulatory oversight. If executed effectively, the framework could become a landmark development for the future growth of IFSC insurance and reinsurance markets. Moon says, and Management Consultants LLP, a trusted partner for SEZ and IFSC Excellence, a pioneer in establishing SEZ and IFSC units within GIFT City and India, delivering end-to-end IFSC setup, operational support and handling, compliances, risk management. Renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university, BATF, and ancillary regulations and fintech. Expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA. Comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.